Hello and welcome to a CMS Forex daily video recap. I'm your fundamental market analyst. Today is Monday, July 26, 2010. The euro rose to a one-week high today, just above the 1.30 level, as we had relief over the results of the stress tests of European banks, which continue to support the common currency as we had seen late in last week. We stalled at the 1.30 level and we were unable to move above that very important resistance as of late New York trading on Monday. Investors are relieved to find that the results of the bank stress tests, which were released on Friday, included no new calamities. While the euro didn't soar on the outcomes of the tests, it didn't plummet either. There is still some hesitation about how valuable the exercise was in terms of the very light requirements in terms of raising additional capital expenditure for the failed banks. However, for the most part, traders were able to check one more item off the list of euro concerns. The greenback remained down against most of its competitors today in the wake of data showing U.S. new home sales for June beating expectations, which did lift U.S. stocks and helped risk sentiment to the positive side. In that release, we saw new home sales rise 23.6% in June versus the 3.3% gain that economists had predicted. The better-than-expected rise follows a big downward revision to the previous month's already record low, but still represented the second lowest pace of new home sales since records began in 1963. You can also see from the right-hand side on the chart, relative to what we had seen in the last 2 years in terms of new home sales, so this is still a relatively low figure. Therefore, this data won't allay fears about how the US will perform in the second half of this year, but in the most part, we still need to get more data this week. The US economy has begun a relatively heavy data week with the Case-Shiller House Prices and Consumer Confidence Index released tomorrow, durable goods and the Fed Beige Book coming out on Wednesday, and second quarter GDP figures, the Chicago PMI, and the final University of Michigan Consumer Confidence Index on Friday. Turning back to some more market highlights, if we take a look at the pound-dollar pair, we see that in today's trading we moved above the highs we had set in last week's session around the 1.5450 level, though we didn't climb too much higher, topping off at around 1.5518 and consolidating throughout most of the New York session. We did hold to a short-term upper levels line of support, and now our support also on the horizontal side is that resistance level that we broke at 1.5450. Like I mentioned, we had a general tone of weakness in the greenback. So if we turn to the Australian dollar US dollar, for instance, which is a commodity currency pair and is very dependent on risk sentiment, we saw that the Australian dollar, while consolidating for most of the overnight session, did break above the 0.8970 level, our resistance from Friday's session, and rallied throughout the New York trading as we saw U.S. equities increasing as we had risk sentiment favoring risk appetite. We pushed above 0.90 and topped off at 0.9025, and that is the level at which we are currently trading around 4 p.m. Eastern Time, New York. Last week, this pair breached a very important resistance at 0.8850, and we can see that the pair, following some consolidation on Friday, is extending its gains following that move above that resistance level. We do have expectations building of another interest rate increase from the Reserve Bank of Australia, and that should help to support the Australian dollar this week. Now, we did have one release come out from Australia, and that was that growth in prices paid to Australian producers slowed in the 3 months through June after surging the most in more than a year in the first quarter. In the second quarter, we saw manufacturing costs drop, which was a big reason for the lower than expected figure in the second quarter. We had the PPI advancing 0.3%. Following the 1% gain in the first quarter. Now, the central bank governor, Glenn Stevens, had signaled last week that the bank is looking for signs of inflation as it gauges whether to resume the most aggressive round of interest rate increases among the group of 20 members. Analysts predict a report this week which will show consumer price growth probably accelerated above the top of the bank's 2% to 3% target range. So while the PPI did come in weaker than expected, we should look for tomorrow evening's CPI report, which will have a very important impact on the RBA and whether it decides to raise interest rates, which will have an important impact on the Australian dollar. Taking a look at another commodity currency pair and another currency pair that's very tied closely to risk sentiment, the USD Canadian dollar. We saw it move in favor of the Canadian dollar, and we broke below the 1.0350 level of support that had been our support throughout most of last week. And as you can see, we had a downward sloping level of resistance, so we formed a bit of a descending triangle pattern, and we broke the base of that triangle in today's trading, though we didn't reach our support from back here July 13th through 15th at the 1.0280 level. So we stopped just at the 1.03 level in today's trading. Now, oil prices, which have a very important impact on this pair, fluctuated pretty much near parity for today's trading, but the jump in US stocks did help to power risk-on trades. So in this pair, that would favor the Canadian dollar. So overall, it wasn't a super eventful session, being that it's a Monday during the summer, but the general tone was greenback weakness, as we did have some better than expected US data that helped to boost risk appetite and helped risk-on trades gain against the greenback. Taking a look at the upcoming fundamental docket, tonight Japan posts a measure of inflation, its corporate service price index. That's followed in Australia by the Conference Board leading index. Overnight, Switzerland posts its UBS consumption indicator. Germany posts a measure of consumer confidence as well as import prices. The Eurozone releases a measure of money supply and private loans, while the UK posts its CBI realized sales, a measure of retail sales. Tomorrow in the US, we will get a look at housing prices from the S&P Case-Shiller 20 City House Price Index. That will be followed by the Conference Board measure of consumer confidence as well as the Richmond Manufacturing Index. So a trio of indicators to give some direction to US equities and wider currency markets in tomorrow's New York session. And that will do it for today's video recap. For more news, videos, and analysis, please visit our site, cmsfx.com. I want to thank you for watching and wish you good trading this week.